Hi everyone, welcome to the Wealth Lounge. I'm here today with Lewis Finn, of a regional account director of API out here in Dubai. I brought Lewis on because API are a company that we deal a great deal with. They're a solid property company that specialising in the UK with projects up and down the country. They're not specific to any particular location. They really dig out the fundamentals. And I think that's what I like about it, because that homework is done for us. So when we talk to clients, we can really use that information and as already done. So I'm going to just bring on Lewis now and just let you talk about what's going on in the property market in the UK and why, and just some of the locations that you're specifically focused on at the moment and why.
Perfect. Thank you very much, Sandeep. Just to give a bit of a background about who API are. So we were founded in 2013, really to act as a distribution platform. So we work alongside investment companies, real estate companies, family offices all across the world, really to help give their clients or their network exposure to the UK property market, utilising our full end-to-end solution, really to make it as hands-off as possible. We firmly believe investment property should transact the exact same way if you were to purchase stocks or equities or crypto, and that once you click trade, submit or purchase on your trading account, you sit back and you watch the asset grow over time, but also you get paid a dividend every month in form of rental income. So not only do we act as sort of the distribution platform, on the flip side to that, we then act as a conduit for UK developers to help give them international exposure that they wouldn't necessarily get if they just did their normal UK distribution sales. Now, we've got 7 offices globally. We try and sort of mirror the major jurisdictions that our investment companies and real estate companies operate in. So I'm based in Dubai. I cover Middle East and India for API. Then from an Asia perspective, we've got offices in Hong Kong and Kuala Lumpur. In Africa, we're based in Nairobi. South Africa, we're based in Cape Town. Los Angeles, we opened beginning of 2022, really to add the support and the presence from a North America and South America jurisdiction. And London is our head office. Now, the offices that we have globally, like I said, are predominantly from a sales and a support mechanism perspective. It's our job to sit down with investors and buyers, really to talk them through the reasons why the UK and how easy we can make the whole process. And the London office in particular is more orientated around the operations and sort of the real driving force behind the business from that perspective. In the London office, we've got a great team on the ground that specialise in the research and the due diligence side of things. So, we don't just say Birmingham looks great or Manchester looks great because XYZ has already been there. We have a thorough due diligence process. And until it meets all of those points, we're not going to look at a particular area, not only from an investment but a development perspective as well. We've then got a mortgage team that works hand in hand with all our clients. Probably 96% of the investors we deal with are non-UK residents, of which, I'd say a good portion, sort of 35-40% are also non-UK nationals. So we specialise in non-UK resident overseas buy-to-let mortgages. The mortgage broker we use has up to 65 lenders available on their panel. So it's not sort of one solution fits all. We will have a solution for that particular investor and client. It really comes down to their individual criteria and circumstances. I
think that's quite important, because I get always asked, the first thing I get asked is, I want property, can I get finance? And it'll always be, they'll always think that there's nothing available in that field, but it is a very active market, mortgages for international buyers. And I think,
absolutely.
I think a lot of that's because the lenders tend to look, when it's investment property, they look quite a lot at the property itself as opposed to just who's buying it. It's about the story about that property, and that facilitates the finance. So, but it's good to know. It's good to know you've got that tool in place.
Absolutely. And what we also do with all our buyers as well, rather than just saying this property sort of fits your circumstances and criteria, if you've got the money, do you want to buy it? We do what's called a decision in principle. So we bring our mortgage team in before the client actually purchases to ensure that, one, the funds they have available have been accumulated correctly, but they've also got enough earnings should they not be able to get a tenant for whatever reason, and they can actually pay the mortgage.
Yeah.
So they will go through a basic fact find, and they can essentially give a decision in principle which will outline what your mortgage rate will be from an interest rate perspective, but also the loan to value percentage you can get. What that then allows us to do is put together a report or a cash flow financial model that will give the exact sort of breakdown from your monthly returns and how that then looks over a 5-10 year period. So from complete transparency, we can see how it's going to grow over time. Moving on from the mortgage side of things, we've then got a tax department that we have we actually outsource it, which is slightly different to the personal tax side of things that you would focus on, let's say, Sandeep. Ours is more geared towards corporate structures. So we help set up limited companies, which isn't for everyone. Again, it's a case-by-case basis, depending on the investor's individual circumstances, but that can help reduce various other taxes throughout the property cycle, again, depending on how long investors are looking to hold for, really. We've got a resale division. So we don't just sort of give the client a property and forget about them. We want to look after them the whole way through. So 5, 10, 15 years down the line, we can actually resell the asset as well. But in my opinion, one of the most important elements to the offering we have is the lettings and management side. So if you don't have a tenant in your property, it's not really investment, it's just an asset that you hold. Ultimately, you want someone in there paying off the mortgage, but also giving you an income. So we will get a tenant in there utilising our lettings management company, Redstone. They source the tenant for you, they manage the tenant for you to make sure that the rent's paid, make sure that the council taxes are up to date. But then also, from a maintenance perspective, the last thing investors or buyers want, certainly when they're non-UK based, is a phone call over the weekend to say that the boiler's broke. The lettings management company, they're really to take that end-to-end solution all the way through to the very end and manage that process. And I refer back to the same sort of stock or equities or crypto purchase. It should be completely hands-off. So that's what they are at the end.
What I like about I've seen a few of your cash flow models, and what I really like about it, you work all the figures into it, and even with your tenancy management costs, even with your mortgage repayments, most people are still comfortably breaking even with higher interest rates now. Most people are still comfortably, breaking even. There's quite often a decent cushion in place in terms of getting what they're getting and what's going out. So I think that's quite important for people to know that it's a sound model, and it's really there for you to see the appreciation build up over time while you hold that property and someone else is paying your mortgage for you.
Exactly. And again, the beauty about UK property, it differs slightly to other jurisdictions or countries in the world in that you've got two types of mortgages. So you've got capital repayment where you pay down the equity of the loan, or you've got interest only. The latter is probably the most used one out of all the investors that we deal with. And just to give a quick reason why. So, we look at the equity element or the repayment element very, very similar to tax. Now, if you can kick tax down the road as far as possible, why would you not want to? A lot of the work we do isn't necessarily just about creating wealth now or preserving wealth for the future. It's also about the inheritance part and what you're going to pass on to your partner or to your children. Now, if you're going to hold a property for, let's say, 15, 20 years now, and in 15, 20 years time, you're going to then pass it on to your children who hold it for a similar amount of time. Well, over that 30 to 40 year period, that £250,000 property could be worth £750,000. So why do you want to worry about paying back, I don't know, £150,000 of that loan, let's say, today? You can maximize the income on a monthly basis because you're paying less off every year. And again, like I say, when we kick that can down the road, that's then what makes the return on the investment so much more attractive, because we need to try and remove all emotion out of the purchase, and that it's really irrelevant what colour the wallpaper is, how many windows you got, to some degree what floor you're on. We should be looking at what gives you the best return on your capital invested.
And fine. So and just quickly to touch on the kind of locations that you like at the moment. So I've seen a bit of a resurgence in London, and you've got a few things dotted around the sort of home counties. And so that's good. I'm from there, so I kind of get a lot of inquiries about that sort of southeast area. That's good to see. But obviously, appreciation is generally at the moment higher up in the north. Where would you see, say, your top three kind of spots that you currently have projects in, and where people can kind of go and have a look at with API?
I think, historically, not just API, but other companies have always focused on the Northwest and the Midlands in particular. Any area that we look at, the concept remains the same, whether it be London, whether it be Southeast, whether it be Northwest, in that we ultimately look at areas that are benefiting from the law of economics. So what I mean by that, Sandeep, is where demand is outstripping supply, where it's forecasted to continue to do so. And ultimately, we look at areas that break down into three main macroeconomic factors. The first one would be education. So not just great university towns or cities, but also areas that retain students once they've actually graduated from that higher education facility. The second point would be corporate relocation. So it's predominantly where companies are moving. It's predominantly where companies are moving from London. And I think COVID sort of aided that. More so because you now got companies doing 3 days a week in the office, 2 days at home, and vice versa. So they've not needed the big corporate offices they've had previously. So moving from London predominantly into other areas of the UK. An example would be the likes of HSBC and Deutsche Bank, who previously left London and moved into Birmingham. We touched on the southeast earlier. Ashford in Kent was probably one of our most popular developments throughout 2021 and continue to be throughout the start of 2022, with the likes of Amazon, HBO and Netflix opening up their film studios later this year, which again creates thousands of new jobs. And the third point would be transport regeneration or development. So essentially making that commuter belt experience more attractive, more appealing. Certainly since the pandemic, a lot of people have wanted to get out of London, into a more greener, leafier suburb, more space, balconies, and so on. But again, these three areas that we focus on, ultimately, they add a demand to the economy. And it's a well-proven fact in the UK that there's a huge undersupply. So when you've got that imbalance of demand outstripping supply, regardless of it being property, equity, stocks, whatever it may be, prices will continue to go up. But if I was to look at the three key areas for us, or the three areas I believe that have been the most popular, I'm going to say Birmingham. It continues to flourish. We've got a number of developments in Birmingham, both mix of off-plan, completed, also tenanted. Ashford in Kent, like I said, was probably our most popular development.
It's also a Eurostar hub, isn't it? So it's got a it's the only place out of London that's got a Eurostar hub. Which is amazing.
You're 2 hours to Northern Europe, you're 30 minutes on the HS1 direct into London. So again, from that commuter belt perspective, it ticked all the boxes. And then the third area that we've found great success in recently, again, is commuter belt London, is Surrey. So it's a little place called Horn, which is near Gatwick. Again, when we look at the macroeconomic factors behind it, the connectivity, not only internationally via the airport, but also your direct train to Victoria. Gatwick being the busiest single runway in Europe, it attracts people of a huge amount in and out of the country on a daily basis. So we've actually been able to set up a new proposition or a new operational role within API for short-term rentals, which again has been hugely popular due to the location of where the development is.
Brilliant. Well, thanks very much for that, Lewis. We're going to wrap up just so we can keep it concise, but really appreciate you coming on, and lovely. I hope to have you back on when you've got a few more stories to tell. And but yeah, thanks very much, and take care, and see you soon.
Lovely. Thank you very much, Sandy. Take care.
See ya.